All right, let's clear the air today, fam. If you're listening to this and you think real estate is your golden ticket to like get rich quick or chill on a beach somewhere while checks are rolling in, hey, this episode is your wake up call. Because I've been in the trenches, gang, and after 4 years of being a full time owner, operator while holding a W 2, I could tell you this game is anything but passive. I want to walk you through how my mindset has evolved, how it's shifted and changed, what I've learned the hard way, and how you should be thinking if you want to win long term in multifamily real estate. When I first got into this game, I thought that I was going to be free in a few years. You all hear the stories: cash flow, appreciation, refis, or even the Burr method: buy, renovate, refi, repeat, whatever it is, financial freedom. And yes, those things are real, but nobody tells you about the grind, the lawsuits, the contractors that ghost you, the tenants that stop paying, that you got to evict. You got to get the sheriff to go take them out, the fires that happen, literal fires, the liabilities, the rising cost of insurance, all expenses, the rising cost of goods, of labor, of everything. Nobody talks about this stuff enough. Most people get into real estate chasing freedom, wealth, to escape the W two, or honestly, even just for prestige. When I started, I was like, "Oh yeah, I am a real estate investor." The first property I did was 194 units. I own 194 units, but in reality, I had like 3% of the general partnership, which is only 30%. So it was like less than 1%. And did I even own a duplex at that point? No. So I had gotten all this money and invested as much as I could pull together. And what I really ended up owning was another job. And, like when I first started real estate, I was like, I wanted out as well for my W 2. Like, I like teaching, I like doing it, but I don't love it anymore. And it's been 21 years of teaching, and I kind of want out as well. So I was like, all right, I'm going to be this real estate mogul. I'm going to be this huge real estate guy who's going to do all this crazy stuff and own all these buildings, syndicate them, and make all this money. But that's not what happens. That's not the case. What I didn't understand was that real estate is a business. It's a full-time job as well, or even more than full-time. And if you treat it like a side hustle, it's going to treat you like a side hustle. So let's talk real numbers and strategies, because you're probably wondering, just like I was when I first started, how do people actually make money in this space? For active investors like me, here's the game. You get equity by putting the deal together. You manage operations like a hawk, because that NOI, that's what drives the value. You either refinance or sell and pull out equity. This can take 2, 3, 5, 7 years, right? So you might not be getting paid for that time. And then you take that equity and you roll it into the next deal. That's the engine. So I'm not sitting here living off of passive income that's coming in monthly. That's not how it's working for me in my scenario, in my position. And I'll explain that in a little bit as well. But my strategy is to get equity in deals. I talk about it a lot, but I really got to drive it home. And that's the machine, that's the engine that I've got to keep feeding. I'm not sitting on a pile of cash collecting rent checks. I'm building something deal by deal, brick by brick. Now, you might be in a different position. You might have tons of money. And if you do have a lot of money, that's a different story, because then you are a quote unquote investor, right? And you can take your capital and you can have it give you a return. That's investing. Investing is when you have capital, you put it into something and it gives you a return. That could be a number of things. It could be a business. It could be real estate. It could be single family house. It could be duplexes, triplexes, commercial multifamily. It could be triple net leases. It could be stock market, right? It could be crypto. It could be a bunch of different things. It could even be like a high yield savings account. That's investing, right? But in order to be a quote unquote investor, you have to have capital to put in. And if you don't, like me, I don't have capital to put in. I'm getting equity. So, yeah, I'm still an investor. I'm just not putting capital in that's going to give me that return. And that's very important to note. That's a really important factor to distinguish, guys. So, let's talk about being passive versus active. And I want to kill the myth of passive real estate for a second here. Real estate is not passive. If you have money and you're investing as an LP, you wire funds and you get monthly updates and hopefully get your preferred return plus some upside. And that's really passive. That's not where I'm at. So again, I don't have hundreds of thousands of dollars that's going to pay me a return and I'm going to live off that return. Are we clear? Because here it's very important to note for my financial freedom number, I need $2 to $3 million of cash that is giving me a return, earning a return as an investment. So once I have $2 to $3 million earning me 5-6%, I can live off that 5 or 6%. But that $2-3 million is going to be sitting in that investment vehicle or those investment vehicles, and I'm supposed to be collecting the interest or the cash earned from that. Okay, very, very important to note. So if you don't have $2 to $3 million to to gain a return on, then you're not going to be a passive investor. Okay, good. So I am sourcing deals, underwriting, raising capital, asset managing, handling turns, leasing, plugging in financial holes, seeking better rates for insurance, dealing with insurance chaos and headaches. Guys, this is not passive at all. This is work, it's ownership, it's risk, it's upside, yes, but it takes a lot of effort. But that's how you build real estate equity. And if you're in my shoes, my position, just like me with no cash, I want to have the positive note here and say, yes, this is possible for you. 100% possible. I just want to reset your expectations to say it is not passive, number one, and it's not going to take you 6 months to a year. It could take you 10 years, and that's okay. If you truly love this game, if you truly love real estate, not just the prestige of it, not just the idea of owning real estate, if you truly love it, you're going to be in it for 10 years and you're going to make it work. I used to think that I'd be out in like 3-5 years, financially free, sipping a cafecito on a beach in Nicaragua. But since being in this game for 5+ years and being an owner operator for 4 years, I've had to extend that timeline by another 10 years because this isn't a lottery ticket, guys. This is a legacy. This is something that you need to build brick by brick. It takes time to build something meaningful. I've shifted from thinking about quick wins to building a pipeline that compounds over time. The refinances, the equity buildup, the relationships, the track record, guys, it all takes time. You got to build trust with your brokers. You got to build trust with your investors. You got to build trust with sellers. You got to be in this game for a long time. Nobody's going to look at you and right away and be like, hey, yeah, I want to invest with this person. I want to sell to this person. I want to buy from this person or do transactions with this person. It doesn't happen. It takes time. It took me 3 years, almost to the day, from meeting somebody to closing a deal with somebody. I'm talking about a broker. You got to think like that. But if you are in it for the long game, for the long haul, then it is all worth it. Again, when I first started, I got hooked on the idea of syndications, on the fact that I could own a huge apartment complex without putting down any money necessarily. Let's take a step back and let's analyze that thought process for a minute. First of all, most syndications are structured with a split 70-30, where 70% is for the limited partners, 30% is for the general partners, or it could be 60-40, 50-50, 80-20, etc. So my thought process was in 2019, when I was deep into Joe Fairless's book, which is a great book, by the way, when I was deep into Bigger Pockets and learning about real estate and figuring out that here in my local market, no deals were making sense, meaning I had to dish out a few $100,000 to buy an $800,000 duplex that was going to cash flow maybe $150 a month when fully occupied, realizing that that is no way for me to gain financial freedom. Realizing all of this, and then jumping into the idea of syndications. Now, the thought process behind the syndication is, yes, I'm going to reserve 30% for me, the general partner. Let's dissect that a little bit because it's not just you as a general partner. I have a team of general partners. And of that 30% equity that I reserve for the general partnership, it is a team of people. And it could be a number of people. So, for example, on my first 44 unit deal, we have a bunch of GPs, and I'm walking away with what, 15% of the general partnership? Are you with me now? So 15% of 30%. Now, what does that really equate to? Maybe 4%, 5% of the entire deal. And that bucket, the 30% bucket that is reserved for the general partnership team, does not get fulfilled or paid into until we hit and surpass our preferred return obligation to the limited partnership bucket. So, as an investor, it is 1,000 times better to have your capital working for you in a limited partnership bucket rather than on the general partnership side. My sweat equity, my work that I put into these deals on the 30% side is a risk. It's a gamble. If we don't reach the threshold of an 8%, 7% or 6% preferred return, go above that, I'm not going to start getting any returns. I need to be clear on that. For example, we're looking at selling our 44 unit property. We're currently looking at selling it for a profit of about $1 million from where we bought it. Now, here's the problem. We owe our investors that profit. It does not meet the threshold of hitting our 8% preferred return to our investors in that capital bucket, right? They invested $2.5 million. They're getting an 8% preferred return on that. So now the profit that we make from selling the property at a gain is going directly to fill that preferred return obligation. We're not going to surpass that on that property. All of the work, 3 years of extensive work, constant work on this project will not pay me. Is that clear? I hope that kind of clarifies. Like, I just want to be upfront and honest about how this game is. I don't want people to come in and think that, I see it all the time. I talk to people all the time who are like, they're just looking for an acquisition fee. They're just looking to get into a big deal. The bigger, the better, because the bigger the deal, the bigger the acquisition fee. Guys, that's not the way your thought process needs to be. And who would invest with somebody who's just taken a course? Screw your course. Screw that. I will not invest with somebody who doesn't have the same mindset as me, who doesn't have the same goals as me, this integrity that I do. I just won't. I won't do it. So for those of you looking out there to just get rich quick, to jump into a deal, get the biggest deal possible, and think that it's going to be passive, and think that you're going to be making all this money, get out of here, take a hike, go do something else. Now, if you're still listening to this and you're trying to figure out how to position yourself, ask yourself, are you building equity or just buying a job? Are you willing to put in 10 years or are you chasing shiny objects? And most importantly, are you clear on what game you are playing? Because once I got clear on mine, then everything changed. This is ownership. This is investing. This is a long game. So together, yeah, I want to build. I want to teach you how to build. I just want to make sure that you're 100% clear on this. If you don't have $2 to $3 million invested, earning you a return, you are not a passive investor. I also want you to know that if you don't have any money, there is hope, but I want you to extend that timeline out 10 plus years. And if you can feel comfortable jumping into real estate and getting into this game for those reasons, that you're going to be in it for the long game if you don't have enough capital, or you're going to be a passive investor if you do have a lot of capital, and maybe try out the general partnership side, the active investing side if you do have capital, as long as you understand how this really works, I am your full-on cheerleader, supporter. I want you to crush the game, go build a legacy. Me love you. All right, and that's a wrap, Small Axe community. So I wanted to take a minute to say thank you so much for listening to the show. And if you liked it or got any value from it, it would really mean the world to me if you would share it with someone else and write a review. Remember, guys, keep sharpening those axes. Let's get out there. Let's crush it. Love you guys.